Good morning, everybody. Doing that last minute scramble. Here we go. Joel, good morning. Watching a video? Which video are you watching? Let's see. Hey, Vittorio. Good to see you in here. Uh-oh. Joel, you are watching management, entries and exits. I like it. Just take a minute, right? Work on it. Work those rules, work those patterns, guys. That's today's, right? Patterns and rules, patterns and rules. That's all we're going to do. Is we're going to talk about patterns, we're going to talk about rules, and we're going to talk about simplicity. There's not, Jose. There's not one that I know of, to be honest with you. Can we talk about, let's do that before we get into class too much. And it's only 20, there's 20 in here, we're just starting. So Jose, let's go through this logically. And there's not a momentum, but let's just talk about it. So what's the first thing that you absolutely positively have to have for a momentum trade? It's momentum, right? And without momentum, there can't be a momentum trade. So I see a lot of people trying to take momentum trades without momentum. I don't have strong triggers. But I'm hoping. The only place in this entire move, maybe right here, right? And then things return and they slow down and you get those anything can happen. So the first part of momentum trades, Jose, is realizing that there's not momentum everywhere. The second part, and let me circle this area right here. And let's go to a 5-1 and let's take a look. The second part is clearing an area, right? And you guys forget that there's rules. If you take the rules, let me get to them real quick. Oh, that's the server rules, not the trade rules. All right, whoops. Here we go. So there are momentum rules. And when you have the momentum rules, that's okay. So you're checking room to the targets, right? You're making sure you're there. So Jose, as you try to develop a momentum trade, and you guys are going to hate this because it's work, right? You have to have momentum. The rules say that you have to be coming from a termination condition. You break through the area, and then you take a little stab back. So I'm going to use this picture, and I'm going to talk about some of the common things that I see when people tell me that they're taking momentum trades. The first thing I see is they don't have momentum, right? So that should be a momentum killer anyway. The rules say that you have to have a termination condition. You have to have that great top, that great bottom. If you don't have it, you've got to sit on your hands. So patience, right? The next thing you have to have is you have to have momentum on the 5-1. Strong triggers, crazy strong triggers coming from a termination. Everything says down. Everything says strong. The whole concept behind a momentum trade is that you break the problem. You guys are great with termination conditions. You get to the south side of that termination condition, and then without divergence, because divergence is a loss of momentum, you take a quick little stab back to the entry. So when you're talking momentum trades, it's the same ideas that you're going to have behind anything really. So here's a termination condition. We'll look at the current market. And we're waiting for that momentum, right? And then we're going to wait for that breakthrough. We're going to wait for that stab back. Momentum trades are your first shot at tops and bottoms. Jose, are you looking for, and let's go to that next level. Are you looking for the trade that you see Ron, we're going to talk about you, that you see Ron taking where he gets in right here and gets out right here? Or are you looking for that textbook Nexgen rules termination condition? That's at 1400 yesterday. I will call you Zorro. Which one are we looking for, Jose? Are you looking for the one that comes from a termination, pulls back, gives you that first shot at a trade? Or are you looking for the one when you have a clear path and momentum to just pull a little? Rules complying. Cool. So here is the best way to learn this trade. And everybody hates that I'm going to make you work, right? The first thing is you have to know the rules. Write them down and turn these rules into a checklist. So any new trade that I learn, I have to know the rules, turn them into a checklist, and then find 100 pictures of my rules being met. So if there's several fibs, you don't know where to place the entry. Okay, that's perfect. So it's momentum, right? So I'm going to go back. I'm going to go back to high probability trend trades. If it's a momentum style trade, if you have momentum and there's nothing in your way, Jose, you know how for a high probability trend trade, you take your trade from the highest point of support for a long or the lowest point of resistance for a short. And why do you do that? You do that because there's so much momentum, you're not necessarily looking for a deeper pullback. It's the same concept. You're breaking that key area, which means that you have to break the lowest point, right? If there's 3 fibs, boom, 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 or if they're one on top of the other, you have to break the outermost, whether it's support or resistance. So it makes sense that that's where your stab back comes from, right? Right there. And I don't know if that was an actual trade. It looks like it may have been. Termination, lots of momentum, everything says up. There's your pullback to a fib and go. So if you're really looking for that momentum style trade, that's the one. Let it break, let it pull back to the area, and giddy up, because it's that momentum that's driving it, right? And if you're taking a momentum style trade, what you're banking on is that that market's not going to pull deeper. But one of the reasons, well, everybody's got a different plan, Jose. Right now, you're feeling like you're missing out. And that's cool. I watch people take trades that I don't take all the time. And you can replicate them, but you're going to have to replicate them and make rules and go through that study. Guys, one of the hardest things that you can do in life is talk to John Novak in the live market, because I read indicators really well, Jose. I understand advantages really well. But I still have to remember that it's mine, right? Yeah, I do it 3 hours every day watching people take trades that I don't. And I watch people make money on trades that I don't take. I'm not a fan of the momentum trade. And it's just because it doesn't suit my personality. That's it. It just doesn't. I haven't bothered to study it, but I know that there's a tremendous amount of merit in it. And I was talking to someone this morning. You have to be consistent on what you're doing first, right? Don't look for everything. One of the biggest challenges I see is new users. New users say, hey, Mark, this trade is great. I know that it wins more than it loses. I know that I can make a living doing it if I can just be patient. But the reality is, Mark, is I don't want to wait for this. And that's what you're telling me, is I don't want to sit around and wait for only high probabilities. So then we talk about the medium probability, you know. So maybe if I'm not just taking high probability, I want to add in those medium probabilities, and I want to add them in based on what I know about the high probability, right? So looking for all this stuff, and then they come to the room and they see people taking momentum trades and people jumping in and jumping out and people taking HVAs, and that human nature part comes in and says, "Man, there's more money to be made. I don't really have this one down yet, but I want to make more money." Jose, start taking pictures is the best thing. Trade your high probabilities, right? Trade your medium probabilities, those things that you've already proven that you're really good at, and start taking pictures on the momentum trades. And every time you take a picture on the momentum trade, post it in the class. Let's talk about it. Guys, this class isn't just for high probability trend trades. This class is for any trade that you tell me you have rules for. I'll study your rules and I'll hold you accountable. And let's look for advantages and let's look for disadvantages. And let's, it can be a growth process all the time. But Jose, remember that high probability is your highest win percentage, right? Medium probability can be a great trade, but it's not going to win quite as much. I'm not sure what the win percentage is on a momentum style trade. I don't know if anybody's done that research yet going through. But go to the rules first, right? Go to the rules first and make sure that you know what it is you're looking for. And then go find 20 examples of it and burn that image in your mind. And from those 20 examples, create a section in your spreadsheet, Jose, that says momentum entries. And just like you burned that image of the best entry for the high probability, burn that image of a momentum style entry in there. And what's going to happen is it's going to be the same process. It's going to take you 30, 60, 90 days to be comfortable nailing that great entry. It's going to take you 30, 60, 90 days to get comfortable with managing those trades. People forget that when you add a trade, it's a reset, right? You're starting over. You don't have to learn the basics anymore because you've got that foundation from the high probability trend trade. You're just learning to apply it in a different arena. So, I mean, that's great. And this is my note for everybody, my message for everybody. If you're working on a new trade, post a picture in the room, write your rules on the chart, and we will talk about everything that you do. I promise. I will give you my 2 cents. I'll give you my read. We'll talk about advantages, and we will work together to get you exactly where you want to be. But I believe that one of the most problematic things for newer users, for people that aren't consistent yet, is looking for everything rather than the thing that's been proven to make them money. So without further ado, what a great segue into the day, right? Guys, I'm going to talk about the foundation. That's our first hour. A foundational approach, recognizing advantages, and then you're going to turn those advantages into whatever you want them to be. Absolutely, Jose. Guys, I love it when you're learning new trades because truth of the matter is it means I get to learn new trades. I get to look at these advantages every day. I get to talk them out. I get to annotate charts. You guys don't realize this, but every time you post, I learn. I'm reinforcing rules through annotation. I'm reinforcing rules through repetition, through discussion, advantages. The same thing you're doing, I'm doing every day as well. I just happen to have the microphone. But before we do anything, right, we're going to check news. There was some 8:30 news this morning. High impact, we're always looking for that high impact, making sure that we're not trading into something that can create an emotional response. Unemployment claims is pretty self-explanatory. We know what's going on. It's just the unemployment claims. Philly Fed Manufacturing Index. Couldn't tell you what that is. Doesn't matter to me. I just know that it's medium impact and it may move the market. I don't want to be in the way. You may not either. It's a decision you'll have to make for yourself. At 10 a.m. today, guys, write it down on a piece of paper. Have Siri give you a reminder. We have medium impact existing home sales. It may be a market mover in the S&P. There's no reason to put yourself in front of an emotional response. That's where people get bumped out, slipped out, because the market becomes unpredictable just for a minute when people make decisions based on what the news says. So every morning I check Forex Factory, and then when we're done there, we just get into the education, right? So what's that foundation? The foundation is a high probability trend trade. The foundation is a trade where every indicator on every chart agrees for the trade. Triggers are going to be their strongest, providing momentum. There's going to be nothing in the way, providing a clear path. There's going to be no trouble between you and your entry target. Guys, this is the unicorn. This is the white whale. This is the one that's going to give you the skill set to branch out and look for more opportunities. Because when you learn the high probability trend trade, it's going to make you a chart reader. Guys, when you're a chart reader, you're going to recognize advantages in the moment. And 90% of what we do, and I can't say this enough, 90% of what we do as traders is just read our charts, wait for advantages, right? The most successful traders I know typically take the fewest amount of trades because they're picky on what they'll take. And chart reading mastery is going to incorporate three essential elements: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And you will be using these elements when you open up your screen and look at your charts. You'll use where the market is likely to continue as the best of the best spot to enter a trade, whether it is a high probability trend trade or whether, Jose, it's a momentum trade. But you're going to be able to determine through repetition, through understanding of advantage, where that market is most likely to continue. You'll understand where it's likely to go, the same thing, using Fibonacci, using momentum. And then you'll be able to understand where that market is likely to stop, where that trend has the potential to end. And that's going to not only keep you from trading into areas that may have a reaction, but it's also going to identify the areas that need to break if you're taking that momentum trade. It's going to give you a big red flag where the trend has the potential to end so that you're not taking trend trades into these areas. And it's also going to provide you an anchor for that highest probability trend trade, that trend trade on the 5-1 chart that comes after a termination condition on the 13.2, after that spot where the market is likely to stop on the 13.2. Guys, this is your highest probability trend trade. This is our first hour of the room. This is a trade that typically wins 70 to 80% of the time when you execute properly. When you go through, you learn the rules, you follow the checklist. Your high probability trend trade is going to take you to where most traders end up, taking medium probability trades. And a medium probability trade is defined when most indicators line up for a trade, however a small issue exists. I want you to notice that a small issue is singular. Not a trade where a ton of issues exist, but I want to take it anyway, but maybe one small thing. Maybe the momentum isn't perfect. Maybe the path has the potential to clear but hasn't. But you're still trading advantages. And when you take a medium probability trade, your ability to read charts allows you to manage assertively, to identify trouble spots, to get to a zero loss level, and to be more aggressive through your chart reading on taking that trade. But without the skill set of being able to read your charts that a high probability trade provides, the medium probability trade is going to prove to be difficult in the beginning. So I'm also going to talk about your first medium probability trade in class. And we're going to talk about the advantages and the disadvantages. And really, the goal is to set you up for a trade that allows you to be profitable while you grow your plan. And that's what the high probability trend trade is. And it's 3 rules. 3 rules that provide 3 advantages. The advantages are listed here in yellow, and they essentially give you the recipe for a trade. What's the recipe for a trade? Well, a trade is momentum. A trade is a clear path. And a trade is an entry area. So 3 rules provide these 3 advantages, and these 3 advantages are going to come about on 2 charts. And again, your ability to read these patterns to recognize the advantages, these patterns are true on all time frames. These patterns are true on all charts, all markets. We're going to start on 2 charts because it's going to provide the most opportunity for education. And then you'll be able to branch out. Maybe you're adding charts, maybe you're adding advantages, maybe you're adding entries, but this foundational approach will set you up for that. Your 13.2 is your large chart. It's your slow chart. It's like a broad stroke of a brush. And the 13.2 is really going to set you up for success. And the first way is it's going to identify the trend of the market. If the background on the 13.2 is green, you're in an uptrend. Brand new users looking for high probability trend trades should only be looking for rules to be met for high probability trend trades long. If it's red, you're in a downtrend, and the same is true. You high probability trend traders should only be looking for rules to be met for high probability trend trade short. Rule number 1, that advantage of momentum happens on the 13.2, and that clear path is going to be present on the 13.2 as well. Guys, 2 out of 3 rules, 1 chart, 3 advantages. This broad stroke of the brush is going to give you the overall temperature of the market. It's going to let you know what the big money movers think about the day, and you're going to follow this. 13.2 is going to lead the way. When your rules are met, you'll be able to refine that broad stroke of a brush on the 5-1 chart. The 5-1 chart is an entry chart. On a medium probability trade, it's going to become a management chart as well. But the 13.2 advantages whittled down on the 5-1 take you to rule number 3. And rule number 3 is going to have you finding the area where the market is most likely to continue. It's going to allow you to reduce your risk and to maximize your profit potential. So 3 rules, and I'm going to post these in the room, guys, and I'm going to encourage you, save them to your computer, put them in your spreadsheet. 3 rules are going to provide 3 very distinct advantages, and you're going to be able to recognize those advantages on only 2 charts. Whoops. There we go. And we're going to break down each of those rules, and we're going to break down each of those advantages right now, coming from the tutorial section and the education page. These are also available for you in the trading rules section on Discord. But everything starts by identifying the trend. If the background is green on your 13.2, we're in an uptrend, and this happens when your small trigger lines break above the large. Small trigger lines are a faster moving average. They're solid. The large trigger lines are going to be bigger. They're dashed. It's a slower moving average. As soon as this small trigger breaks above the large, that background paints green, and it keeps you focused. Your first advantage is just trading with the trend. Opposite is true. When smalls break below, you find yourself in a downtrend. Trading with the trend is a huge advantage. And then rule number 1 says that we must have strong trigger lines. We have to have the advantage of momentum. In an uptrend, the small trigger lines will be crossed up. They'll be above the large triggers that are also crossed up. Both trigger lines have to be green, and they have to be strong in the direction of the trend. It's the space created between the small and the large triggers that lets me know that the odds are favorable for the market to continue in the direction of the trend. In Classroom, you're going to hear odds favorable momentum 1,000 times during the day. In a downtrend, smalls below the large, larger wide, angled down. The space created between the two gives me the advantage of momentum, that odds favorable momentum. So if you're brand new with me in class, if you're focusing on a momentum trade, if you are looking to give yourself the absolute highest chance of success as a new user, give me a Y in the room and let me know that you're comfortable with this simple look. This is your strongest trigger look. It's like scissors. When they open up, you're ready for business. When those scissors close, you're not cutting anything. Because when those small triggers return to the large triggers, it's a weakening of the large triggers, guys. Anything can happen up or down. You go from the advantage of momentum to kind of a coin toss here. So you're going to let that momentum lead the way, and that momentum's not going to be true from the beginning of the move all the way to the end of the move. So you're going to create and recognize opportunities when those triggers are their strongest, when that advantage is in place. And what you'll see on a 13-2 chart quite often are these tails or these wicks. And guys, that's just potential entries on the 5-1. So if you start training your brain just a little bit, scrolling back, looking for opportunities, taking pictures of trades, when you have that odds favorable momentum and you see a wick or a tail on your 13-2, circle it. You'll be able to line it up and really focus on your entries on a smaller, faster chart. Let's see if maybe crude is a little bit better than the S&P right now. Odds favorable momentum. Small's below the larger wide. They're angled in the direction of the trend. Get in the habit right now, just for studies. When you have that great look, circle the tails when you see them. We'll come back and talk about these tails to see if they were potential entries. But rule number 1 is going to keep me focused not only on the trend, but also on trading with the momentum. And with all of that momentum, I need to make sure that I'm not trading into something. Making sure that I have the advantage of a clear path. And a clear path comes from recognizing where the market is likely to stop. Termination conditions are nothing more than areas that may reverse the market. These are key areas where the market may react. Fibonacci is an area where these big money investors have the potential to take profits, to enter positions, and the market typically reacts there. The areas where this happens are going to be these divergence high lines, these magenta lines, letting you know that there was a loss of momentum at that price. Red Fibonacci resistance, yellow 1-to-1s, blue Fibonacci support, or this magenta divergence low, letting me know that there was a loss of momentum at this pivot in the market. And it becomes a simple 2-step process, guys. You're going to take these areas and you're going to run a comparison. That's all it is. 2 things have to happen to determine a termination condition. The first thing is that price is going to reach the area. These price bars are going to come through. They're going to reach an area, whether it's support, whether it's resistance, whether it's 1-to-1s, a divergence high. And if resistance is reached and all of your trigger lines remain below, small and large, well, then you no longer have a clear path. This is an area that may reverse the market. It's certainly not guaranteed to reverse the market, but you're forfeiting that advantage by not letting this area clear. An area is considered broken when both the small and the large break above the area. Now we have that advantage of a clear path. The area is broken. Resistance begins to act as support. And there's one of those tails right there on the 13-2. So when we're talking about rule number 2 and we're saying that no termination conditions must be present, it's very black and white. Either no trigger lines have broken through, no trade, or both small and large have broken through. You now have the advantage of a clear path, and if you have odds favorable momentum, you're clear to look for an entry. So in its most basic form, is everybody comfortable with this? No triggers, no clear path, no trade. Smalls and large, the area is broken, it's a clear path. For you guys looking for momentum trades, this is a very key concept. When we start talking about that medium probability trade, when you have that foundation, you're recognizing advantages. Guys, this center picture is your medium probability trade. It begins with odds favorable momentum. The small triggers are above the area. The large triggers are below. This 69.80 has the potential to break with all of that momentum, but it's not broken yet. This is what we call a 50-50 trade, guys. 50% of your trigger lines are through the area, 50% are not, which means that when you are looking for this first medium probability trade, it's okay to absolutely insist that your entry conditions are perfect on the 5-1. So when we talk about entries, you can commit yourself to the highest probability for this look that says that the area has the potential to break with momentum. Everybody comfortable with that? This is rule number 2. This happens on the 13-2 chart. This is the one providing you the advantage of a clear path. And that advantage of a clear path takes a lot of problems out of your way. You'll see it from lows. We have what's called a pivot stop out of a prior divergence. When the market creates one of those pivots, gives you that divergence low, this on its own is nothing more than a pivot. This is the market going from down to up. When price comes back and reaches the area, and you ask yourself, where are the trigger lines? They all remain above. Price will trade below and then back above. This is what you call a pivot stop out. Here's your pivot. Everybody that went long off this pivot just got stopped out, hence the name. Now you have a termination condition. You'll see them from lows. You'll see them from highs. And when they happen at key Fibonacci areas, it just adds power to the top or the bottom. Termination conditions that create full reversals are a strong top or a strong bottom. And those strong tops and bottoms are the basis for that highest probability trade. Go back to my pictures. Price reaches resistance, no trigger lines break through, no long trades. Price pulls all the way back to support, no trigger lines break through, no short trades. 90% of what you do is going to be reading your indicators, reading your charts, waiting for the advantages had so that you can enter the market. And then that best scenario, when a termination condition, price reaches 1-to-1s, absolutely no trigger lines break through. When it creates a full reversal, meaning that the smalls get to the other side of the large, that the large go from red to green. This full reversal provides odds favorable momentum and a clear path. There's one of those tails, one of those potential entries. Guys, this trade is that trade that typically wins 70 to 80% of the time. This is the one that you learn in the beginning. This is your focus for the first 20 to 30 days. Once you are great at this one, it begins to open up opportunities for you. It begins to set you up and get you prepared for that medium probability trade. When the smalls break through, but the large haven't, I still have a tail, I still have a potential entry, but you'll be able to use your chart reading to gauge if this is your best chance of success. So that's using areas for termination conditions. There's one other termination condition that'll be used not only to determine when that trend may potentially end, but also to recognize how to manage out of those medium probability trades. Sometimes the market clears the area, the triggers break through, the path is clear, but it seems to turn and head the other direction. Sometimes with that odds favorable momentum, the area isn't reached and then it just goes down for seemingly no reason at all. This final termination condition is going to let you see on the 5-1 chart the change happening faster. You'll be able to see these turns using a smaller, faster chart, helping you recognize maybe when that trend has the potential to end. And it's simply using 3 divergences in the same price range. It may terminate the trend. Divergence is a loss of momentum. So when you've lost momentum 3 times, it may push the market the other direction. It becomes more powerful when the small triggers work their way inside of the large triggers. When you go from odds favorable momentum on the 5-1, remember these patterns are true on any time frame. To anything can happen, couple it with 3 losses of momentum. It's more likely to push the other way. And then when that third divergence from a low is higher than the previous pivot, price can't exceed the previous pivot, momentum is lost again. Anything can happen triggers, and that market is most likely to push the other direction. Same thing from a high. So you're going to see this look on a low or this look on a high when things like this are happening on your 13-2. You're going to recognize change faster before it actually happens. using that 5-1 chart, using that smaller, faster chart. And let's see if we can find an example of those three divergences in the same location. There it is right there, right at that pushback to resistance. 1, 2, 3 divergences, and sure enough, that market pushes down. Recognizing the patterns, giving you an advantage, making sure that you're comfortable with what you're seeing, reading your indicators in the moment so that you can take the best of the best. He just launched a start. I thought he was doing that the other day. That Elon. Is everybody comfortable? Termination conditions? Price reaches an area. Where are the trigger lines? If they haven't broken, sit on your hands. If they've made it to the other side, look for opportunities. If only one has made it to the other side, make sure that your entry is perfect. So let's talk about the perfect entry, guys. When the rules are met on the 13-2, this is your 5-1 chart. In an uptrend, when there's strong triggers, when there's no divergence, no termination conditions, your 5-1 chart is going to be screaming to the upside. You're going to have those strong triggers. You're going to have up bars, and you're just going to focus your attention on the large triggers, on the synthetic triggers. They should be stacked one on top of the other, coming up like a shark about to breach in that long trade. You're going to focus your attention on the triggers, and you're going to focus your attention on the areas that are near those triggers. Rule number 3 says that we're going to use a limit order. You're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Favorable large triggers, here's your picture. Large and synthetic, trending one on top of the other. Because when these triggers are tight, right next to each other, it's going to create a smaller window of opportunity. And your window of opportunity for entry is going to be the areas inside of those favorable large triggers. Areas for entry can be fibs, mid-bands, or 1-to-1s. And you'll define that window with a reversal bar using a limit order to buy or sell a pullback. You're literally going to wait for the market to come to you. And a pullback begins with a reversal bar on the 5-1. And a pullback is nothing more than a small retracement in price that is counter to the underlying trend, meaning that the 13-2 says up. The 13-2 has momentum. The 13-2 has a clear path. So on the 5-1, we're going to wait for that market to push down. And we do that because of who's in control. Large chart is the large crowd. It reflects the overall temperature of the market. Large crowd gives you momentum. Large crowd has a clear path. Large crowd says everything is likely to continue up. We rely on this small group, these yahoos that want to fight momentum, that want to fight trend. And typically, they'll create a small pullback, a little retracement in price that begins with this reversal bar. Well, if the large crowd rarely lets them get away with it, so you're going to identify the highest point of support, a mid-band, to the lowest point of support, these 1-to-1s, inside of favorable large triggers, and this becomes the area where the market is likely to continue. And I'm going to activate a limit order at the top of the window for longs, at the bottom of the window for shorts, because with all the momentum and a clear path, my expectation is that it simply isn't going to push too terribly deep. If the market, that small retracement, comes back to the area of support inside of favorable large triggers, I'm now in a long position at 79.21. I've entered the market. My expectation is that it will continue up with the trend. And I entered the market while the market was coming back to me. Guys, this is how precise you're going to be with being able to pinpoint where it's likely to continue. I have the advantage of momentum. I have the advantage of a clear path. And I have the advantage of having entered where the market is most likely to continue. And I'll take this trade 1,000 out of 1,000 times. My protective stop is going to go below the window of opportunity where the market shouldn't go. but I'm going to fully expect that the market may push down a little further inside of that window. Once the market begins to move in the direction of my trade, I'm going to reduce my risk below that reversal bar. I'm going to use momentum and Fibonacci to make good decisions about targets. But when I have the advantage of momentum, the advantage of a clear path, and having waited for the area inside of favorable large triggers, this is a trade that typically wins 70 to 80% of the time. And when you put those two charts together, we talked about circling tails when the advantage of momentum is present. Talked about circling tails when there's no termination conditions. Notice how this circle lines up with the area support inside of favorable large triggers. Guys, this is your best of the best trade. This is your first 20 days. Being able to recognize these advantages in the moment is going to set you up for success on different levels. Is everybody comfortable with the high probability trend trade? We're not trading the tails. We're trading the areas inside of favorable large triggers on the 5-1. Waiting for the reversal bar, identifying the triggers. There's your window. One line inside of favorable large triggers. Two lines stacked one on top of the other in a very packed trigger line. That's your best of the best entry, guys. Focus on it. Give it 30 days. I'm going to give you a high probability trend trade checklist. Compare everything you do to this checklist. Make sure that your advantages were present, guys. I print this out and put it on my desktop, and I literally will put check boxes in each and every one of these. Focus on that one. I'm going to give you another one. Here's a high probability trend trade with pictures stolen from the manual showing you exactly what each means. I'm going to give you that picture. Keep that on your computer. Study it before the day starts. Make sure you understand what it is that you're looking for. And then the most important thing you can do, guys, this is your laser focus. How to write your plan for your first 20 trading days is you're focused on the high probability trend trade. Use the phrase my trade is. My trade is the high probability trend trade. In order to enter the trade, the conditions must be met. Do I have that good top or bottom? Do I have momentum, a clear path, an area for entry? And then your job is to start taking pictures every day. Scroll back. Right? Man, I open a lot of stuff, don't I? Scroll back on the 13-2. Circle those tails. And it pulls right back to a midband inside of favorable large triggers. Take that picture. Because this is a pattern that repeats itself every day, over and over. Take each and every one of those pictures, guys. Beg, barter, steal. Get as many as you possibly can. Put a couple in your plan so that you can always click on a picture at a moment's notice in your plan and make sure that you know exactly what your best entry looks like. And then more importantly, every time you take that picture, guys, post it in the room. Every time you take a trade, every time you take a picture of a high probability trend trade, post it in the room. Let's talk about it. Let's make sure that you're seeing things correctly. Let me give you feedback, 15 hours every week, live. And then take that picture and put it in your spreadsheet. Build a database of what your perfect entry looks like. Jose, this is what we talked about earlier, right? Taking so many pictures of the perfect entry that you burn it into your memory and the look becomes easy. It becomes second nature. Guys, this is your first piece of the puzzle. Just defining entries. 20 days getting in at the right spot. And then the next piece of the puzzle will be defining your management plan. On this example plan, this is the most mechanical plan that I know of. And it removes the emotion, it removes anxiety, it really removes your need to know how to read charts. Trade 2 contracts, initial stop will be 12 ticks. I'm going to put that in my ATM strategy, but I'm going to adjust that stop above or below the window of opportunity. It may be 8 ticks, it may be 18 ticks. When I get a reversal bar in the direction of the trade, I'll move it a tick or two above or below that reversal bar. I'll take profits on my first contract at 100, and I'll move my stop to break even. And at this point, there's $100 in the bank. I have nothing to lose, and I'm only looking for an additional 10 ticks to get to that $200 or an additional 8 ticks to get to that $200. And guys, this is the most mechanical approach that you can come up with. And if you allow yourself 30 to 90 days to practice a mechanical approach to a checklist-based entry and a $100, $200 automated exit, you can adjust your targets based on experience later, because every great entry creates a management opportunity. Guys, this is your plan for the first 20 days. Keep it simple. Keep it laser focused. Put as many pictures in this room as you want to put. There's no limit. But the only thing that I ask of you guys is write your rules on your chart. Help me help you. Reinforce what it is you're doing. Tell me why you got into a trade. Don't just say I got in because of a blue line. Tell me the advantages. I had odds favorable momentum. I had no termination conditions. I had an area inside a favorable large triggers mark, so I took this high probability trend trade. And what you're going to find is that you're reinforcing the looks, you're reinforcing the rules, and more importantly, you're reinforcing the language that tells you exactly what you're looking for. 20 days, annotate charts, put them in the room, put them in your spreadsheet, build that foundation, and you'll be amazed at what you recognize. All right, so this is crude oil. And I'm circling now. That was 6:46 a.m. Just a little recognition of how often this pattern does repeat itself. The highest probability with the clear path is going to happen a little less often. But what do you think, guys? There's a termination condition that creates a full reversal, and it gives us odds favorable momentum. Here's my reversal bar. At the time of the reversal bar, I'm going to create a box around my large triggers, and then I'm going to shrink that box to create a window from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Give me a Y if you see it, guys. This is how you create a window of opportunity. This is a 50-50 trade. This is large triggers above, small triggers below, no divergence on the trade, strong triggers, little window of opportunity. This is a medium probability trade with a small window of opportunity, and we can see how it reacts. It went to the top of the window, and it pushed through, didn't it? Medium probability, not high probability. This is your second trade. And guys, honestly, I love the look of this trade. I probably might have taken a small loser here and been okay with it, because sometimes the market pushes. But that's how you identify a window of opportunity, right? Good morning, Thala. And that's all we're going to do in this classroom is we're going to talk about rules, right? We're going to talk about finding that window of opportunity, that best entry. You guys are going to post in the room over and over. This is what I did, Mark. This is what I did. Let's talk about it. We're going to go to the live market, and we're going to look for examples. We're going to talk about what we see. Termination condition, full reversal, odds favorable. Do you recognize it as a 50-50? The smalls are above, the large are not. No divergence right back to the mid band, pushes back up. There's a loss of momentum, pushes the market lower. Medium probability trades must be managed assertively because you're giving away the advantage of a clear path, which means that all the other advantages should be present, right? You got slipped on that one, Paul? I've had it. I think we've all had it, right? You're going to get slipped from time to time. Guys, one of the biggest things that you have to realize is we're not in charge of the market, right? We don't control it. We are small fish in a big pond. Cue the shark picture. And that's what Paul was talking about with the sharks. Sharks are those big money investors. These are the guys that are creating odds favorable momentum. These are the guys that are making sure that there's a clear path. These are the guys and the gals, right, that are reacting to those Fibonacci areas, creating sharp pushes, the one that you guys just experienced. We're the remoras, guys. All we can do is trade a plan. Trade a plan that gives us the highest chance of success. Trade a plan that's been proven to win more than it loses. Trade a plan that is repeatable, that is something that you can study and go back test. And then we'll be the remoras. We'll try to take a chunk when these guys tell us that the conditions are correct, right? And that's all we can do. So initially, you guys take this one and you're thinking to yourself, man, this is the perfect 50-50. I love it. Hopefully, if you were taking that 100-200 approach, you got paid on the first one, you got break even, you ultimately ended up slipped. But then the market pushes right to the bottom of that window. And for those of you using market flow, it gave a signal from a high volume area for perhaps a second chance. Just because a trade doesn't work the first time doesn't mean that it's doomed to fail forever. There may be opportunities to re-enter, guys, and as you grow and learn your software, learn to read those indicators, you're going to have a better chance of seeing those. Friendly reminder, we have medium impact news coming up in about 7 minutes, 6 minutes. It's going to be the existing home sales. I'm going to leave the S&P up. We'll see if that market reacts to the news. And I'm going to take a little break real quick, guys. I'm going to go refill my water, grab half a bagel. When I come back, I'm going to start going through each and every chart. 43 of you in the audience right now. If you're brand new, and I know that I got some of you guys in here, Jay Trucker, feel free to post pictures, annotate them, ask as many questions as you want to take. HM Pant, nice to see you back. Post pictures, annotate charts, tell me what you see, tell me how I can help. And not just these brand new demo people. Guys, if you've been with me for 10 years and you need help, I want you to ask for it. If you purchase the software and you're learning to use it and you're like, well, I don't want to get in the way of the new people, guys, get in the way of the new people. If you have a question, I want your questions answered. If you take a trade and you have, man, I'm just not sure, post it in the room. Let's talk about it. These are opportunities for education, not just for you, but for everybody. So I don't want you to feel like your questions aren't valid or important. Each and every person has a voice in here. And if you post, I'm going to get to you. And I'm going to give you anything and everything you need to help you get to that next level. Guys, I will be back in just a few minutes. Remember, news in about 6 minutes. And we will get to the second half of class where we start checking everybody's charts. Back in a minute, guys. On NinjaTrader 8, it happens every now and then. So watch this. Let's go through the process. Let's go through the NinjaTrader 8 get it right stuff. Documents, NinjaTrader 8. I'm going to go to my database and I'm going to delete the cache and the tick. I'm going to go back to NinjaTrader 8 and I'm going to go to my temporary folder and I'm going to get rid of anything and everything inside of this folder. This is how quickly that NinjaTrader 8 get ready stuff can be done. I'm going to go to workspaces. I'm going to get rid of my recovery folder. And then once I do that, I'm going to double click on my NinjaTrader 8 and I'm going to get that up and I'm going to load it up. So while that's loading up, sorry, I have to put in my password. 6 seconds of my life I'll never get back. That's it. Cache, tick, template, recovery. That's the basic that I'm going to go through. And then once that comes up, guys, my NinjaTrader is going to come up. Here comes my S&P right back up. It's pretty quick, but that's how quickly. Yeah, that's how quickly I can get back up and running with this. Nothing ever shows up in your temp folder? That's weird. Mine typically fills up almost instantly. You want your 4 seconds back, Alex? Guys, it's inconvenient sometimes, but the reality is that NinjaTrader 8's a workhorse, and it puts a load on the computer. And if you don't have all of the RAM, if you don't have the right graphics card, it creates a little bigger pull. One of the things I'm probably going to treat myself to here pretty soon is the big bad computer. John doesn't typically have crashes. He's made that pretty clear to me when he likes to make fun of me. But this has everything. This is designed specifically to run NinjaTrader 8 with our software for Nexgen users. I don't know if you guys saw this. I don't work for these guys. I'm not selling their computers, but I do know that there's people that are using them and they love them. So if that's a challenge for you and you're in the market for a new computer, that's the laptop version. They do have a desktop version as well. All right, my fibs are calculating. I do not make loans. I'm tired of breaking fingers and kneecaps. Can't do that anymore. So guys, let's go through and let's start looking at the trades that you guys are taking this morning. We've gotten quite a few posts from you guys. And the cool thing is I'm probably going to see the same thing over and over, I hope. Gary, you're saying anything can happen, waiting for the triggers to clear. Not necessarily anything can happen, right? Smalls are below the large. They're breaking through. They're accelerating. But you did recognize a potential termination condition right there. And that's a key part of it. And you're just saying my rules aren't met. I'm not taking the trade. And guys, this is one of the best educational things that you can do for yourself. And Gary, I don't think anyone does it better, is even if your rules aren't met, take pictures. Talk about what you're looking at. Identify conditions on the chart. Make sure that you're good. Here we go. Jay Trucker trading gold. Everything says down. Momentum is there. The path is clear. I love this trade. There was your first entry right below the mid band. When you get this pivot stop out below, guys, this is a chart reading thing. And Jay, I don't know if you knew this was happening, but this is brilliant. This pivot stop out at the bottom, remember the pivot stop out, typically clears this pink line. You get in at 203.8. Your stop keeps you safe. Jay, knowing that you ditched your large synthetic triggers, it's not a bad entry because of the chart read. Ideally, your entry comes from an area inside of favorable large triggers, but you ditched the synthetics, right? And that's cool. And I took 2 trades this morning. I took the exact same trade, but what had happened is these trigger lines were split. I didn't have that that favorable large triggers, and I put my stop in the wrong spot, and I got stopped out, same place. But I re-entered the market and was able to make money on the trade going all the way down. More than made up for the small losses. So absolutely, since you're not using those synthetic large, a pivot stop out is a good entry. It's a great entry. It's not a high probability trend trade entry. And these 1-to-1s gave you a great bounce point as well. And you'll notice that they coincide with the top of those large triggers right here. And that would have been the high point on your synthetic triggers. So I know you took them off, but if you look left, there's those synthetics right there. Can you guys hear me? Just want to make sure. Jay, that's a great trade. Very well done. Okay, thank you, Thela. All right, Gary, let's see what you got. Pivot stop out, at support, triggers roll, high volume area. And you're saying, man, I've got resistance above and support below. Let's get out of this little area. I love it. Another great chart reading, just reminding yourself of the advantages, recognizing potential disadvantages. And then Paul giving me a slow link here. There we go. Good top, resistance, absolutely no triggers, full reversal. That's a great looking top, isn't it? Odds favorable directly into the potential termination condition though, right? You've got 1-to-1s, no trigger lines break through. Pivot stop out here, there's that pattern again. Pivot stop out here, beautiful entry. Creates a manageable trade. Recognizing your one potential challenge, great entries, make manageable trades. Nicely done. That's a solid trade. You did see them? Did you make the decision to trade into them? And this is why I ask people. Sometimes people break rules on accident. Sometimes people gauge advantages. And Paul, I think that you certainly had every advantage. You had an amazing termination condition. You had great looking momentum. You had a tiny window of opportunity. And you had a pattern that created a very realistic expectation for entry. And you had room to manage. And this much momentum typically creates a retest. Paul, I think this is solid trading. Nice job. Let's see where we're at here. And guys, if I miss your trade for some reason, make sure you let me know. Just for those of you that haven't been in class before, this is how I get back to your trades. I scroll up and down, and every now and then I might miss something. Make sure that you let me know so that we can talk about anything and everything. And guys, if you come back, you go to get a cup of coffee or something, let me know. So 50-50 with divergence that worked. All right, Jose, let's talk about this one. Where did it come from? Did it come from a good top? Did it come from a termination condition that created a full reversal that gave you odds favorable momentum? Because that's gonna lend itself to a more successful 50-50. You've got very strong triggers. You've got strong triggers. You've got strong triggers, right? You've got a tiny window of opportunity with the triggers still outside. And I'm not sure what that one is there. So it did come from a good top. So Jose, as you grow through, as you grow with the software a little bit, remember that we're talking advantages, right? Everything has to revolve around advantages. So as a brand new user, I support wholeheartedly. No divergence on a 50-50, no slowdown, strong triggers, tiny window of opportunity. That's your best of the best, right? No divergence, strong triggers, tiny window of opportunity. So Jose, as you grow with the software a little bit, you're going to begin to recognize other advantages. You're going to start to recognize, man, I'm coming from a great termination condition. That adds fuel to the fire for this thing moving back down. I've got so much momentum that it's going to be tough for this market to turn on a dime. It's probably going to retest the low. And then you've got your 8 range chart over here that does nothing but verify and kind of validate that odds favorable momentum. And you may say to yourself eventually, well, with one divergence, I'm still willing to take this trade. So I think it's a great read. It's a good circle. And 50-50 trades, medium probability trades, as much as you identify a disadvantage, you've got to be committed on identifying the advantages that go into that trade as well, and have a plan. If then, if divergence prints, maybe I wait for a market flow signal. If divergence prints, I wait for a higher point in the area, higher point in the window. If 2 divergences print, well, maybe then I say if my area inside of favorable large triggers is at a pivot stop out, then I'll take the trade. I think it was a good look, though. I think it was a good look with the strong triggers, with the strong triggers, with the strong triggers. That was a very tradable moment because it had so much room to get back to the first trouble spot. And guys, remember, working on entries and then working on exits. And this was Gary. Decided to not wait on market flow anymore. And I think that's okay. Jose, let me show you a trick. And maybe this will help you. This is when you still want confirmation, but you don't want to give up 10 ticks. And I think Gary may have used it here. This is the exact same trade. As the market pulls up, here's your market flow confirmation. My brother taught me this trick quite a while ago, and you're going to miss some. Are you guys okay? You got to be okay with missing some. Do you see the high volume area right there on your confirmation bar, Jose, Paul, Gary? Some people, and I'm not saying that you have to do this, I'm not advocating, I'm not telling you how to trade. Some people, after confirmation, will place a limit order right there at the bottom of that high volume area. Their risk is already established. And if that next bar pushes up and hits that high volume area, because what's the high volume area? It's the area where the most sellers got together on that bar and made things happen. Some people will wait for that bar and see how this one would have gotten you in right at the area. You're still a couple ticks up, probably would have kept you in. So go study it. And Jose, this may help you a little bit. I hate the confirmation of market flow. I really do. That's just me. I don't care for it at all. I don't want to be 8 or 9 ticks into a trade. Especially on a medium probability trade. So I've gotten to the point when I have this many advantages, if I'm going to take this trade, I'm taking it from the area. I would rather lose 6 ticks on a pretty solid looking medium probability trade than give up 8 ticks for confirmation on a trade where this hasn't even broken yet. I hope that makes sense. Something to go look at. And as we see it today, we'll do it more. Gary, trouble at the first spot. No reason to exit on the second spot, but you're just taking money. And then you're just chumming the water, right? At this point, You say a reversal bar can take me out. But at this point, you have a clear path. You have odds favorable. You have every trigger line on every chart down. And you have areas of resistance inside of favorable large triggers. If you're going to put your stop on the way to an entry, why not just exit and wait for the entry? Because the odds are favorable right here that you're going to get stopped out and it's going to come right to resistance inside of favorable large triggers and then finish the move without you because you're going to be too busy going, damn it, I got stopped out. Something to think about from a management standpoint. Don't put stops where the market is likely to go. And there's that same trade. Smalls outside with divergence, go at the top of the window. Who was this one? I clicked on it, but I didn't even look. This was Paul? This was Paul. Smalls outside, go at the top of the window. Perfect entry, beautiful trade. Paul, putting on a clinic. Same trade. Oh, Gary, there it is. And here's the management side, right? You're in, profits, profits. When that divergence prints, that makes sense now, right? Smalls are inside, second divergence, probably going to push up higher. I love the exit. Nice job. Jose, let's see what you did. Everything says down. Smalls below the large are wide. Those two divergences, you get in, and it just gets you. It's a rules-based trade, isn't it, Jose? Smalls below the large, clear path. The only challenge that you have are those smalls inside in the second divergence, saying that it might push up a little higher, and it did. But I think this is 100% rules-based. Your window of opportunity ends at 52. These are the trades that without that momentum, if I'm going to take it and expect it to go down, this is a 5 or 6 tick risk trade for me. Great rules-based entry, though. Hey, guys, here's your reminder. Are you ready? Let's do this. Are you ready? I ask that a lot. I don't care if you're ready or not. I'm going to say it. So here's Jose's trade. Yeah, because if it goes up beyond this area inside of favorable large triggers, Paul, I no longer have the advantage of an area where it's likely to continue, right? And it does. So did Jose. Jose, you had odds favorable momentum. You had no termination conditions, 100%. And you had an area for entry inside of favorable large triggers. And you were coming from a good top, right? There are no bad days, David. There's only moments in those days that aren't going the way we planned, right? Can still be a great day. We just got to work through this moment. Does everyone see how Jose's trade fit the rules 100%? Give me a Y in the room if you see it. We use the checklist. We gauge the advantages. Everything checked out, right? Anything that wins 70 to 80% of the time has to lose how often, guys? Math wizards, help me out. 20 to 30% of the time? This is a cost of doing business, right? This is taking a trade with every advantage. 70, 80% of the time, you're going to find a level of success. 20 to 30% of the time, you've got to be okay with having your butt handed to you because we don't control the market. We don't get to pick which 70% win, right? All you do is have a plan that provides advantages. And this is my favorite thing that I've ever read, ever. as a trader, when you stop expecting to win every trade, you'll find that you win more trades. And when you don't care about the result, because you've back tested, you believe, you trust, your rules win more than they lose, right? And you worry about the execution of the method because the method has been proven to win more than it loses. Guys, this is the most liberating, freeing moment as in a trader's life. When you can take that trade, Jose, and when it loses, pardon my French, you don't give a shit. Because you know that if you go through these 150 perfect entries, you've got a great shot of success. And guys, in my spreadsheet, I will post losers that follow the rule. Because I don't care about the result, I care about the execution. And the execution was perfect on a perfect trade. Absolutely, Alex. Mark Douglas. You know, he and John worked together. They used to talk all the time. Not work together, but they talked back and forth a lot. He was a great mentor for John. And a lot of the mentality that's brought into this, understanding the method, understanding the process, validating the results, not letting one trade determine whether or not you're a bad trader, letting a sample of trades, and remembering that when you focus on the process, the results typically come. And it takes a while to believe that. It really does. It takes a while to believe that. Because it hurts to lose a little bit, doesn't it? Pivot from nowhere, right? Check it out. Not an area. Straight into resistance. Mid-band. Large triggers below the areas. Not even 50-50 yet. This is crude oil. Did this area ultimately hold? Did the market continue down? Holy smokes, it most certainly did, didn't it? There's a pattern. Pivot, not from an area, goes right to resistance. The 50-50 is very unlikely to be successful. Pushes all the way back down, not from the area. Once again, resistance holds. Guys, dollars to donuts based on the patterns that I know and recognize. This market's looking for 77 flat right now. We still have things in the way. But that termination condition pushes beyond the area, resistance holds, beyond the area, resistance holds. If we get through 77.40, I'm going to play crystal ball. Not saying that there's a trade to be had or rules that have been met, but I recognize patterns. 50-50, not from a good area. So we just talked about this, right? When your 50-50 trade isn't coming from a good top or bottom, Jose, everybody that loves that 50-50 trade, when it's not coming from a good bottom, this trade is less likely to work. If this HVA line prints, the trade's even less likely to work. Guys, these are patterns. When you begin to recognize things, when you begin to focus on that best of the best trade, you're going to start recognizing things around you. All right, Paul M. Bad top, straight to the ones in the mid bands. Triggers are nowhere near. Gap theory. Paul, counter trend, right? I love this trade. I think the execution is beautiful. Did the 21.3 support it? Just curious. Do you use a higher time frame for this trade? Or are you banking on that holding because of the trigger location? You don't? So this is what's called an edge trade. I love that it comes from a bad bottom, that it's a bad top, everything. It's more the fibs. Beautiful. So Paul, this is one of those things, and I don't ever tell people to add charts, but this trade has a higher success rate if you let a 21.3 be strong in the direction, if you give that 21.3 the same look that you give the 13.2 for a 5-1 trend trade, this is really just a higher time frame trend trade, and your trigger lines let you know that that's what's going on. This is beautiful execution. Nice job, Paul. Was this the S&P? No, this is 6E. So just something to think about. So the 1-to-1s are a 100% alternate. And check this out. You ready? Glossary of common terms. Oh, let me go to the tutorial section. Glossary of common terms. You guys know we have answers for everything, right? So from A to B, Paul, it creates from the low up to the high pivot and then back down to this low C. What happens is your software begins to predict where that 100% Fibonacci alternate is, and that's when these 1-to-1s print in. Same power as a fib, they're just happening in the moment. So that's exactly what was happening here, which gave you an amazing bounce point and a termination condition. And then were you using the gap theory as well? Large triggers more than a full bar away as you pulled into this termination condition, price is likely to snap back to them. These 1-to-1s are from your 13.2. So they'll print unique to the chart. Down here? No, that's a great looking bottom. That's a termination condition that creates a full reversal. Does that make sense, Paul? This is from the 13.2. This is 100% alternate from the 13.2. Unless you've done something to alter your charts and pull them from other time frames. But each 1-to-1 is unique to the chart that it's on because it uses the pivots from that chart. Great trade. Beautiful execution. And use the fib retracement in the 38%. Do you think it's coincidence that 100% Fibonacci alternate lines up with a 38.2 retracement? This isn't coming just from this pivot, though. This is coming from a series of pivots. This is a huge swing coming through, lining up, and it happens to line up with Fibonacci. If you've ever doubted the power of Fibonacci, oh my gosh, Paul, is it really going down? I'm going to buy one of those Magic 8 balls, shake it up. I'm getting pretty good at this stuff. It's just chart reading, right? How many times do you suppose I say that in a day? It's just chart reading. It's just reading your indicators, determining advantages, and doing it. Paul, you said no window. Bad bottom, 50-50, no window. Perfect spot to get run over. I agree wholeheartedly, Paul. What a great read. Understanding when the 50-50 provides an advantage. Understanding when the 50-50 does not. Nicely done. We can all be taught, right, guys? We can all be taught. Gary, 50-50, on support, no divergence, little window of opportunity. No reason to wait for market flow confirmation on this one. You're going to lose, guys. Gary, this was a good look. It was a great look. It just didn't work. The sooner you work through the fact that sometimes you're going to lose, the easier it becomes to handle when you lose. There's that 50-50 again, right? Joel, where was your entry? Joel breaking your rules on the entry, and this time it worked for you, right? Joel said, I'm not going to get in at the best spot. I'm going to form an opinion and get in up here, and then you got rewarded for breaking your rules. which is just going to have you thinking I should probably break my rules more because this one time it worked out. Don't worry about the results. Worry about the process when you're on sim, guys. Folger. That's a good top. You have momentum. You have momentum. You take the no divergence, pull back to the mid band with everything going down. So Jose, here's your momentum trade. Termination, momentum, nothing in the way. There's your pullback to the mid band. That was really your first one. And then it pulls through a little higher and works its way down. This is your first shot. Momentum in, momentum out. Divergence prints. You take an exit, you wait for the best entry, right? Nice execution, Folger. Dave B, good morning. Dave B, no reason not to enter, right? Odds favorable, clear path. Everything says down. You're losing momentum on an 8 range. You're losing momentum on a 5-1. It may push higher, but this is a tiny little window of opportunity at the absolute best of the best spot. I would rather take this loser than not take it because there's one issue that exists. Little loss of momentum, but everything still says down. I probably just would have run a little tighter stop. I don't think I would take a full loss on that look because 55 is solid all the way across the board. You guys see that? Let's do a little momentum or a little management lesson real quick. Straight from the manual, right? Stop should go where the market shouldn't. And I'm going to take a bright white. This is your fib, right? Price shouldn't go above that. This area is supposed to hold. There's that same fib and that same fib. Guys, this is where the market shouldn't get above on each and every chart. Does that make sense? If it goes above that, hasn't it really gone outside of the scope of goodness, we'll call it? Give it a little room for a few ticks overrun, but there's no reason to take a 12 or 14 tick loss. Because if the market goes all the way to here, guys, isn't it probably going to hit the next area? If the market goes all the way up here, by then the trigger lines are strong against it. Scope of goodness, yeah. I just made that up. So it's okay to put a little less risk on a trade when you have that tiny little window of opportunity. But Dave B, I think you took the perfect trade from the perfect spot, and then there's just a little management opportunity for you. Stops where the market shouldn't go. All right, Joel. Termination condition. Pulls back. Great entries make manageable trades. No reason to hope and pray into a termination condition, right? Guys, if you're going to trade into a wall of resistance, it's okay to take profits at the wall of resistance. Let it break and then look for another opportunity. Everybody wants to hit a home run. I was talking to someone this morning. I had a great conversation. And I had to admit, I admit these things sometimes, guys, that I'm human. And when I start deciding in my head that the market's going to go farther than the indicators say it's going to go, that's when I start giving back a lot of money. When I start hoping, when I start forming opinions, guys, that's when the money falls out of my account. If I know I have a termination condition and it's already created a bounce and all of my triggers are beneath it, that's nothing more than hope at that point. Did I say this was a bad bottom? I don't think I mentioned it, to be honest with you, but it is, isn't it? It's not coming from anywhere. Out in the middle of space, right, Tony? And didn't we talk that when pivots come from outside of areas, that resistance is likely to hold? And then it happened again and the resistance held. And at some point, at the risk of trying to sound smart, I said that your most likely scenario, if this area breaks, is 77. But where are we right now? We're 50-50 at a pivot stop out. We're 50-50 on 77.40. So you have to make decisions. Your window of opportunity is about 5 ticks wide. You've had a loss of momentum, but the triggers are strong. You 50-50 traders are making decisions right now, aren't you? You've already seen the fight. 50-50 trades breaking out of ranges either run like a scalded dog or they're going to lose fast, guys. You have to determine whether or not that's a risk you want to take. Great pictures so far today, guys. All right, David, let's see why it's a bad day so far. I can't see your entry here. You went short, and it looks like you got stopped out. Oh, nope, that's your exit from somewhere else. I love this one. Everything says down. You got in right at the top of the pullback and got out. David, I'm not sure that that qualifies. Is nothing good. That's a pretty good one. Platform crashed twice. Well, I see you're on Apex. Do you have your rhythmic up so that you can manage? Cool. And this one, David, is kind of what we talked about yesterday. I love the look. It's a 50-50 though. And it's a 50-50 from a bad bottom. And look how far away your triggers are from your entry. And you don't have momentum on the 5-1. Do you see that? And this, I think, is, if I'm not mistaken, for this style trade, that's your look right here. This is your kind of, that's anything can happen triggers. And I think that as you grow with the plan, you're going to take these trades and you'll see it enough times to say, oh man, with the triggers all the way down here, not all that momentum, everything's below resistance. This thing's probably going to pull back, and you'll get to the point where you start to gauge. And one of the things that I like about Ron C's trades, and I think Ron C posted in the room here, so I'm going to click on his link. I'm going to push him to the front of the line, is when he takes them, he's not trying to be the first tick in. He's saying, hey, check it out. Everything says down. Everything is strong. I've gotten through this area. I'm going to take a quick 10 ticks and then GTFO right here at the trouble spot, which is, I love it. And then Ron's got a little different style, but on that same token, right here with all the momentum down, Jose, do you see that breakthrough and pulls right back? That's a momentum trade that a lot of people take, but Ron says, I'm going to let it prove it, and gets in a little bit lower. And neither entry is wrong. One just says, let it break, right? The backside of price has to clear fib. It did, didn't it? Bump, 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 pow. It's just a plan based on chart reading. Oh, there's that phrase again. Chart reading. Taking advantages and letting them be trades. Not taking trades and hoping for advantages. Joel, we already saw that one, trading into a termination condition. You managed to salvage some. Paul. Let's see what Paul did. Termination, pushes up, 50-50. Killer termination condition, and then everything says up with a clear path. Perfect entry. You got paid on, did you get paid on one, Paul? That's fine. Joel, if you don't make mistakes, you don't ever learn, right? Guys, I used to lift weights very aggressively for a while. I was a personal trainer for a while. And you don't grow without duress. The body doesn't change without some sort of stimulus. And when you're learning to day trade, your stimulus is breaking rules. It's making mistakes. And that's okay. I can't stress that enough, guys. You're going to make mistakes. I still make mistakes. We all do. All right, Paul, since you posted it, I'm going to take a picture, and we'll just do it on this one. We don't have to get the whole grand scheme of things. Clear some of these out so I can get to my checklist without losing it today. Are you ready? Are we coming from a good bottom? Guys, play along with me if you're brand new. Let's talk about it because this is a great management lesson. Are we coming from a termination condition that creates a full reversal? What do you think, guys? I think yes. Do we have odds favorable momentum? I think yes. No termination conditions? Absolutely. Do I have an area for entry inside of favorable large triggers? And guys, this is that next step. Both of those are 100% rules-based high probability trend trades, aren't they? The first pivot is your high probability trend trade. Your second pivot is a high probability trend trade. And this is a pretty common mistake, guys. You get in, you take quick profits, and your management plan says go break even. So you go break even right here. The next step in the learning process is having the cognitive realization that my rules are still 100% met, and this mid-band is still the most likely spot for an entry on a high probability trend trade. And then you have one of two options, right? Paul already got paid on the way up. Paul can say, because the rules are still met, even though I'm in the trade, the rules are still met, I'm still going to keep my stop down here, and I'm going to add contracts because this is another potential 70% winner. Does that make sense, guys? Stop placement, stops always go where the market shouldn't. And Paul realized that. So he came through and he annotated his chart and he made sure that he recognized that maybe that wasn't the perfect stop placement. Paul, great trade though. Same thing. First attempt didn't fill, so you didn't chase. Where are multiple divergences, Gary? It's just one divergence, right? Cool. So multiple is you justifying not getting in at the area of support inside of favorable large triggers, right? That's okay. One divergence. But Gary, and then the flip side of this, and I love that you posted this chart, and guys, there's so much information to be had on these charts. When does divergence factor into your high probability trend trade, guys? When does divergence on the 5-1 come into play when you're looking for entries? When there's 3 on a high probability trend trade? Or if it's a 50-50 trade, right? If it's a medium probability trade and you're giving away the advantage of a clear path, there's no advantages being given away on the 13-2. Your 13-2 is the absolute best of the best look. Your small triggers are still outside of your large triggers, and there's only been one loss of momentum, and you have crazy strong triggers on the 8 range. Guys, this is a get in at the area trade without hesitation. The market's going to fluctuate, guys. This is a smaller, faster chart. It's going to fight. This is a rules-based trade as well. So even if you didn't catch it, if you managed out of it, if you skipped it, go back and annotate it. Because don't you think if you go back to this picture and you annotate and you say, hey, look, this is the best of the best. This is exactly what I look for. This is the entry area. These are the advantages. Man, I should have taken this trade. You're more likely to take it the next time. That negative 440 will affect your decision making, won't it? You'll start second guessing because now you're afraid to lose. And if you're afraid to lose, it's because you don't trust your rules. That was the one that you should never, never miss. Oh, thank you for that. Who did that? Paul, did you post that? Keeping that up, flatten those accounts in the event of a bad situation. Jose, beautiful. Odds favorable, no terminations, perfect entry, making money, divergence prints, you take the exit. Did you re-enter? What did it do after? I'm curious. No? Because of the two divergences? That's another lesson, guys. Catch the best ones, and you don't feel compelled to try to catch all of them. Safia, odds favorable, two divergences, two divergences. You do get a signal from the edge. And two divergences, here's that pattern. Paul is my pattern master on this one. And we'll go back and look at it and see if it happens. Who is this? Is this Paul? I'm sorry, I thought this was you. Oh, this is Paul. My apologies. Are you waiting for market flow at the higher point at the pivot stop out, right at resistance inside of favorable large triggers, Paul? What did it do? Two divergences on a 50-50. Pushed up, right? Saw the signal from the edge. Never gave a signal. Kept you out of trouble. Nice job. All right, Safia, this one's you. So we've got that termination. We have odds favorable. I like the odds favorable. But you are into a termination condition, right? You are into a termination condition, but you have that full reversal happening. You're also a full bar away as you come into that fib. Definitely a lower probability trade. I love that you took money quickly on it, right? Giving away the advantage of a clear path. And also, look at the gap back to that large trigger. You're taking a momentum style trade, really, that's lining up. And I think that quick profits in this situation is brilliant. Why so far below the areas? You guys ever ask yourself, as you get into a trade, what areas are expected to hold? Fibs and midbands are expected to hold, right? That was your thinking with this look? Joel, you're doing great, man. Don't be frustrated. Take a deep breath. Go walk around for a second. Stop staring at your screen. Guys, if you find yourself frustrated, take a break. Safia, so your area was 41.50.11, right? Fibs, midbands, that's your area expected to hold? That's where you anticipated the market to go up further because of your 13.2? I'm just making sure that I'm reading this correctly. That's what I see. That's the one, right? And it lines up with an HVA, just adding to the probability. Oh, you were placing the entry and adjusting. Okay. So you were still making decisions as it was coming down. Right on. That happens. That makes sense. perfect. And I asked these questions. You were going to go lower? I think that the fib in the mid band is solid. If you're going to take this trade and risk the gap, that's the spot, right? This one's outside of trigger lines. That's your spot. And it lines up with a high volume area with odds favorable momentum. So I think it's great execution. So go back and annotate. Talk about the gap. Talk about this is your area likely to hold. Talk about it lined up with a high volume area after a termination condition. This is the most likely spot if it's not going to close the gap to the triggers. This fib, this high volume area, that's your sweet spot. You were right at it, just a couple ticks below. I think it's a great trade. I think that's a great first shot too. If you're going to take a run at it, you took a run at it in the right spot. Jose didn't take it because of the one-to-ones. So one-to-ones on a large chart, or these purple one-to-ones, typically a pretty good bounce spot. Not a bad place to take profits, right? But so for shorts, a tick or two below the window of opportunity. For longs, a tick or two above. So for longs, a tick or two above support. Yeah. See how Jose is just above the mid-band coming in. Jose, good bounce spot, but when everything says go, and we didn't quite reach it either. So, guys, these small swing one-to-ones may give you a little bounce. But if your rules are met 100%, more often than not, looking for Fibonacci. Looking for that next Fibonacci area. 50-50 didn't work on the breakout. Didn't we talk about that? If it works, it's going. If it doesn't, yeah, you'll see them for bounces, but I'm sticking to my guns, Jose, that when I'm actually taking termination conditions, whoops, wrong one. I'm sticking to this look. These are where my termination conditions come from. Those purple one-to-ones are a great place to take profits and wait for the next opportunity, but I won't let them keep me out of a trade because they're small swings, and your 13-2 is a broad stroke of a brush. Do you guys see the fight? Pivot from beyond the area up to resistance. 50-50 doesn't work from the bad bottom. Pivot from beyond the area, straight to resistance. Triggers can't go through from a bad bottom. The 50-50 on that consolidated area doesn't work. The buyers push back. Straight to resistance, termination condition. Large triggers are a full bar away, again from a bad bottom. I don't trade trend lines, but there's a lot of people that do. Whoops. Does anybody ever do this? I don't trade this at all, but I can still tell kind of what's going on and what's happening there. They're trying to break out of an area. Currently, I don't have odds favorable momentum. I'm in an uptrend. And we'll see what it does. It's going to play and work for the rest of the day. I'm sure we'll see what happens. Paul? Uh-oh, Paul said bingo. And there you go, Jose. Paul, great entry. Where was your second entry? Whoops. 13-2 is perfect, isn't it? Oh, there you go, right at a mid-band inside of favorable large triggers. Absolutely beautiful. Does everybody see it? No reason not to take this trade. Your large chart says, embrace that phrase, large chart says everything's going up. Gary, 50-50. 50-50 on a pivot low, consolidation. You do have the area of entry, two divergences. There's your divergence low right there. And then like we were just talking about, Jose, well, at the time of the trade, you were there. It was still there. You hadn't broken it. You know that it's there. But the most important thing, the lesson on that, is, guys, look what the market's doing. Support to resistance, overrun to resistance, overrun to resistance. There's a huge fight in these key areas. And I've said it in class a million times, and you're probably going to hear it a million more. When the market can't establish a strong trend, 50-50 trades are less likely to work. This key divergence low is certainly an area to watch. Just like this divergence high was a key area to watch, wasn't it? Support to resistance, and then it breaks out. Bad bottom, resistance, bad bottom, resistance, bad bottom, resistance. All the way back here, guys. No, because we're in a range, right? Guys, there's a huge fight. You're watching the sharks fight. That's all you're doing right now. You're watching the sharks fight. These guys are fighting for supremacy. Let's take a picture. Everything says down. The sellers are in control. They can't make the key area. The buyers push back. Bad bottom, 50-50 doesn't work. Sellers push again. Now we get the pivot stop out all the way to support. The buyers push back. There's a 50-50 at resistance, has a good shot. But when this 50-50 doesn't work, look what happens. The sellers fight. The buyers push back. The sellers fight. There's your pivot stop out, divergence low. The buyers push back. There's your pivot stop out, divergence high. And the sellers unload. Look how your large triggers didn't react. They kept getting lower. And then there's your bad bottom, pushes all the way up to resistance. Once again, the 50-50 doesn't work. Market pushes all the way down to a bad bottom once again. There's your 50-50. That one had a couple. Actually, I think that one might have been perfect. It didn't work. Pushes up, textbook termination condition. Resistance is held for the second time. They push it all the way down to that key area, and they almost make it. Large triggers can't get through that key number, and the buyers unload right up to resistance. Large triggers don't follow, and the sellers are pushing. Do you guys remember right here where I said this market has a pretty good chance if these areas break? They're looking probably for 77. They're looking for that next key area, but they can't seem to establish a clear path. Does that make sense? So when you notice both resistance and support, when you notice the market can't break out of a range, that's kind of your clue to say, I'm going to let it break. I'm not going to sit and hope. Look, Paul, we already saw that one. And then Jose, we saw that one. And then Gary, pivot from space, right to resistance, right? Not looking for that long, taking that good lesson. Yuri, you're on crude. Yuri says pivot from space, back to resistance, doesn't hold. Let the small get to the business side of the large, come back and tap. I like this one. And there's that profit target at 77.02. I'm rooting for you. Guys, this isn't a high probability trend trade. What this is creating expectations based on what's been happening. Termination to overrun to termination to overrun to termination. He's saying, man, there's probably going to be overrun again. My small triggers are strong. Everything's rolled on my 8, on my 13 range. I've gotten my trend change and I'm pulling right back to that key area. Yuri, I love this trade. It's not a high probability trend trade, guys. It's a recognizing patterns in the market through repetition and being willing to enter a trade. That was a 13. And there's your trouble spot, right? You can see it. You can see where the trouble spot is. It's a terrific read. Those large triggers are still up. The trend is still up. But that is the absolute best first shot. This is a continuation style pullback to the small triggers, and he executed it on a 5-1 perfectly. Nice trade, Yuri. I love it when you pop in here. Yuri's like, you know what? I haven't seen Mark in a while. Let me go show him how smart I became. And you're there. Right to the fibs, guys. Termination conditions. Now we're waiting for the reaction. Let's let those sharks figure out what they want to do at it. I'm going to take 5 minutes. I'll be back. If you take a trade, put it in the room. If you have a question, put it in the room. If you have a declaration of sovereign independence and you need to declare it, you can declare it in the room, but it's not going to do much for you. Guys, I'll be back. Paul, that is an opinion. Joel, have a great afternoon. I'll see you guys in just a minute. Still hear me? Have a great afternoon, man. Good stuff. And guys, I think we're all caught up on pictures, right? So Jose, we're coming into that first potential momentum, right? Termination on the 13.2, termination on the 5.1. Guys, there is, if you're using the 8 range, a pivot stop out with a reversal bar with divergence. Everything says this is potentially a pretty good top. So now we're starting to get momentum, right? Still waiting. But you see how things are beginning to turn. The market says this could be a good top. These charts are kind of reaffirming it. What's setting up right now, guys, is what we call an HVA trade, which means termination condition, trigger lines roll, trigger lines roll. This red line right here is where the sellers got together and said, to hell with the buyers, we're going to try to push down. And if they come back and test it, I'm going to give them hell. That's a high volume area trade. Mid-band is always the first target. If we don't reach the mid-band, and that's your first shot at a good top, guys. That's your first shot. But taking these first shots on a good top, you're still fighting trend, right? You're still fighting momentum. Termination. Waiting for the triggers roll for an HVA. Gary just posting a picture of what we just talked about. Here's your first target, right? But from that good top, large triggers aren't a full bar away. All we're doing now is hoping for a bounce. Man, I hope that mid-band gives me a bounce. Why? Because now it's kind of starting to confirm that this top is a good top. Can I explain why what? Why do birds suddenly appear? Explain why the mid-band is the first target? Why I placed the order? I'm going to give you the Sunday school answer. Because the rules say. Because this is what's called a high volume area trade rules. And the first rule says the large chart must have a termination condition present. We've got it, right? Large chart has a termination condition present. Don't make this trade until the trigger lines roll. This is on your 5, 1, and 8 range. Don't trade against a very strong trend. Watch the mid bands for the first target areas. Well, my trigger lines rolled. My trigger lines rolled. I'm watching my mid band for the first target area. Define and place your entry at the high volume green or magenta line from the market flow inside or at the trigger lines. Inside or at the trigger lines. But what do you notice here? I've already reached my target, right? So the high volume area trade's off the books. Now what I'm looking for is potentially a trend trade. Does that make sense? So I'm able to define my trade. I'm able to check if the rules are true. I can create a checklist for it, right? Paul says that these triggers are too flat. Paul says that if I go back to the rules and I look at my best trigger look to give me the highest chance of success, the most advantageous, strong, odds favorable momentum, Paul says this isn't it. So Paul, are you saying that you're willing to not enter at that mid-band that's not inside of favorable large triggers because you don't feel like the look on the 13.2 reflects the most advantageous momentum available for a high probability trend trade? Trying to be picky. So, perfect. From this termination condition, with the smalls below, the large up, kind of the area, could you use market flow for confirmation? If you wanted to take a shot at it, because of the termination, because of the momentum, because everything rolled. So let's see if we get one of those signals from right here. And if we do, you could hit sell market, right? You know where it should go from. You got a kind of an area here. Trigger lines. Look at that. We didn't get a signal yet. So far, it's kept you out of trouble. Is everybody with me on what we're doing here? Guys, I'm not telling you to take a trade or not take a trade. I don't have odds favorable momentum, and I know that my midband is my first target, and it's already been reached. So I'm just kind of hanging out for a second. I'm using my 8 range to help me make a determination. I'm saying with it. So market flow signals defined, and great question, Matt. When the trend trade rules are true, meaning that this signal has to come from an area inside of favorable large triggers, right at those large triggers. So I'm looking for an arrow generated by a white bar, which means I'm looking for either the green arrow for the up, or I'm looking for this red arrow or this magenta arrow for a down. I'm looking for a yellow reversal bar, yellow signal bar, or I'm looking for an antenna bar. And those are the 3 signals when the rules are true that may initiate a trade. I still haven't had one. All I've had is an awful lot of up bars, right? And I'm well beyond the area. So my trend trade's kind of off the chart at this point. Does that make sense, Matt? The key to the volume analysis on market flow is that the rules need to be true. If they're not true and you just start trading signals all willy-nilly, that's a technical term that we use in the business, what you're going to do is you're going to find yourself chasing trades with no advantages, and just because one arrow printed. So now the large triggers are up, but the small triggers are down, right? So you didn't have that best momentum look. It still may go down, guys, but I don't know. Because of the termination, because of the trend, because everything's down, you might eventually create a trade that says, well, I'll take a shot at it. Maybe from right here at the trigger lines, if I get a signal, let's see if a signal prints. Wouldn't be a high probability trend trade, right? I don't have momentum. So I would be trusting direction based on a signal. I would be fighting all sorts of stuff. There was your signal. Happened almost instantly. I don't know about you, but I'm not going to add 4 points of risk on a trade without momentum. So that was your first signal right there. And it came from the triggers, and it came from the triggers, and it came with direction. It came after a termination condition. Did you see that high volume area line? The same way this one said, the sellers said, I dare you. That's the buyers saying the exact same thing. So now I don't have momentum. and I have a problematic area where the buyers got together and said, triple dog dare you to try and go lower. Sometimes, guys, it's just reading indicators, right? Waiting for advantages. Termination into the mid band. Large triggers below reversal bar. I'm not sure what that means. It's still a good top. It still has the potential to go down from here because of the good top. The small triggers are below, right, Matt? I agree 100%. See how that's flat and lifeless, though? And if we go back to the rules, and we're talking about the best of the best, Matt, and it's that old thing, learn your rules so you know how to break them. But if I'm looking at the best of best, if I'm looking for a short trade, man, that's my look. Look at the strength. That's aggressive. That's like, man, go ahead. I dare you. Look at this push. And what you'll find is when there's absolutely nothing going on here, it's imperative that everything agrees, right? And see how it's kind of waffling? Yeah, wide triggers. So let's go back. Remember how easy these trades were to get to the termination condition? Look at that trigger look. And now this one, while it may still go down, you forfeited momentum. So if you chose to get in somewhere up here, you have a small issue. You have to manage a little more aggressively. And this is where more experienced traders will say, well, I'm coming from a termination condition. Everything still says down. My larger down, my triggers are below them. I've got odds favorable minimum of 8 range. Everything rolled. And you'll have to develop a plan outside of that high probability trend trade based on advantages. I'm not even looking at a 21.3, Jose. Will you show me a picture? My concern is that I don't have momentum, that I've traded directly into the mid-band. My concern is the one-to-ones here created a bounce, the one-to-ones on my 8 range, this high volume area, all of these up bars. Guys, nothing is clear. Does that make sense? Nothing's obvious to me that says, Mark, don't you dare miss a short. Or Mark, don't you dare miss a long. Yeah, Jose, so you have termination conditions on every chart. I mean, you have termination conditions on every chart, adding fuel to the potential for this to go down, right? You get in at the mid-band, your stop's in place, your reversal bar's in place. Market flow confirmed, you're short. All of those termination conditions help. All of the termination conditions help, right? Everything saying down helps. Jose, I don't know where your 21.3 is coming from. Is it coming from? Because the 13.2 is coming from a termination condition that reversed the market. So your 21's coming from the market. So we can say without question that your 21 has odds favorable momentum to the upside. That off of that termination condition, it pulled all the way back to support in the large triggers. What about down here? Because the 13.2 came from a good bottom down here, right? And this is just a bigger chart. So if this look on the 13.2, isn't that a pullback to the mid-band on the 21? That's a pullback to the mid-band. It's just one of those things, guys, where you can wait for advantages 100%, or you can take, because I have more advantages. And this one, because every chart, even Jose, your 21.3, you had a termination condition at 63 on every chart. Every trigger is rolled. Every chart is red. Odds favorable. Smalls below the large. Everything says down. Market flow confirmation. You've identified a potential trouble spot. And now you can make the decision. You can say if then. If I get a higher divergence, maybe I'll take an opportunity for some profits. Can you guys see how everything says down but not without some issues? Do you have enough advantages to warrant the risk? And that's a question that only you guys can answer. I can't answer that for you. Do you have enough to warrant the risk? That's all it is. My rules say I can't trade with this trigger look. That's just my rules. My rules say I'm willing to stay out of this because this isn't my best look. But my rules also say that there's a snowball's chance that I will ever miss this trade because my rules say that I have to take it. So if I made $1,000 on the way up, am I concerned about not catching an iffy $200 to $300 on the way down? This is the key, guys. Don't miss the ones where everything agrees. Don't miss the ones that are clear cut. Don't miss the ones that fit the rules 100%. And if you don't, you won't feel the need to trade the ones that don't have all the advantages. What do you guys think? Does that make sense? And then let's go back and look again. Who uses a 21 chart? So you know you're not going long, right? If you use a 21. Are you going short against this? And I'm going to show you how my brain thinks, and I hope that maybe this clicks for somebody. If on a 50-50 trade, if my 13.2 isn't perfect, I insist that the smaller chart is. Give me a Y in the room if this is the first piece. If the 13.2 isn't perfect, the 5.1 should be, right? So if you're using additional charts, if the 21 isn't perfect, should the 13.2 be? Do you see that? Trickle down, right? That's my concept. When I use a 21.3, if I decide to put it into the mix, if my 13.2 looks like garbage, my 21 better support something. So, and again, chances are this market is reacting well to that termination condition, but you've got to be willing to sit through some nonsense while they figure it out, while everything comes back together. That's all I'm saying. I'm not saying don't go short. Definitely I wouldn't go long. All I do is I think in advantages, guys. Jose, I don't disagree with your trade. Let me be very clear on that. I don't disagree with your trade. I probably would have waited for market flow confirmation, but your stop was good. And everything on every chart says down. And at this point, Jose, you're probably pretty minimal risk, right? It still says down. It still says down. It still says down. And now you're starting to clear that trouble spot. So if you can weather the storm, good job. But you got to be able to read your charts to do it, right? Holy smokes, Ron. Is that box still here? So we set it at what? 9:30? It's 11:30. Paul, there's your crystal ball. What a fight, though. That was tough. That was a tough fight. Just because you can read it doesn't mean it's a trade, right? Would have been a crazy long wait. Just because you make the read doesn't mean that there's a trade. Jose, nice trade. Now everything says down, doesn't it? Matt, does that make sense what we were talking about here? The termination gives an advantage. The strong triggers give an advantage on the smalls, but the large weren't helping. So in order for you to consider a trade, you needed to make sure that you had help coming from someplace else. And Jose did. Jose recognized the help. Then market flow gave you that confirmation and allowed you to check your problem areas, right? And then once these small triggers roll, do you see how it stabs right back to the small triggers in the mid-band with everything down? You guys ready to have your mind blown? If you skipped this one because you didn't care for it, right here everything agrees again at almost the exact same price. So if you said, nope, I'm not going to take this one. It's below the areas. It's too flat. I don't care for it. We're bouncing off the mid-band. When everything rolls and everything says down, that's your second chance to take advantage of every indicator on every chart suggesting that the market may go lower. You still have to manage it, right? See the patience piece? Guys, I love continuation entries. When my 13.2 doesn't change, when those conditions stay constant, sometimes it's just as simple as letting that quick little momentum subside. Good lessons today. What do you guys want to talk about? Boom, look at that. Right to support, guys. The sellers got what they wanted. How long did it take them to get it? We want it. Buyers say no. But we really want it. Buyers say no. Man, let's go down. But the buyers say no. They're like, here we come. Buyers say, ha-ha. Right to resistance. Nothing blinks. And now they finally got it. You guys watch how the sellers say, all right, we're taking profits. And look what the market's doing when it finally reaches that key area. Now you have a termination condition that creates a full reversal. Now this full reversal gives me odds favorable momentum. What has to happen to look for a long trade, guys? What am I looking for? I'm looking for a clear path. I've got odds favorable. Haven't reached the area yet. It's 50-50. Do I have a window of opportunity? I feel like I do off that good bottom. Check this out. There's that place where all the buyers got together. My window's right here. It is 50-50. There's one of those white bars coming from nowhere. And there's a loss of momentum. I'm going to hold on a second. Jose, what a great trade. Nicely done. Why'd you take that exit? Now it's pulling back to a mid-band inside of large triggers with the small triggers down. 600 out of it. You don't have to say anything else. Nice job. You had to suffer for a minute, right? But everything's set down from a termination condition. 50-50 with divergence, right? There's one of those high volume areas. There's that line in the sand. If you get in the habit of just talking things out, here's what I see. Here's what's for the trade. Here's what's not for the trade. Here's my advantage. Here's the disadvantage. It's like a bar fight for you rough and tumble people. You ever had your three biggest friends standing behind you and you thought, all right, I'm good. If you said to yourself, here's my areas, but I have divergence, there was your market flow confirmation. Jose, Gary, Paul, if you said, I'm not willing to risk that much on a 50-50 with confirmation, and you put a limit order right at the top of that window, that high volume area line, you got a better fill on a 50-50 with a small window of opportunity with market flow confirmation. And because of this high volume area line at 46, you know where the trouble spot is. This pink line is your most likely spot for this to be a lower divergence. And look what happens off of that pink line. There's one of those antenna bars with stranded buyers. But divergence hasn't printed on a 5-1. So if you're in this 50-50 trade, you're waiting for divergence to be true maybe, right? Second lower divergence might take you out, if then. If that divergence never prints, wouldn't it be a shame to jump out on the potential? Are you guys with me as we talk through it? I have a termination condition creating a full reversal. I have a full reversal giving me odds favorable. I have odds favorable and a pullback to an area of support inside of favorable large triggers with one divergence. If I took it at the area with all of these advantages, I was in at 34. I'm already up $100. It's already in the bank. If you break even, you didn't get hit. If you're saying to yourself, I still have tons of advantages, I'm willing to risk a little, well, then you're still in the trade. And where are you expecting it to go? At least a 53, right? Fibonacci resistance. Termination creates odds favorable. Odds favorable. Pushes everything up. Small group pushes it right back to the perfect entry. Market flow confirms just in case you need that little bit of confirmation. Your line is red. Did it hit the line? It's a tick off, right? So you're making a decision. For me, with a termination that creates a full reversal that gives me all this push, I'm willing to risk it a tick off when everything says up. Confirmation got you in. If you missed the first confirmation, there's your second confirmation. Your risk is established. And guys, bingo. What started the party? Termination condition at support. Termination condition creates a full reversal. Full reversal creates odds favorable momentum. Jose, there's your momentum trade. Back to the midband. Termination condition gives you a full bar, target not reached. There's a pull back to the midband. That was your first shot. That was your second shot. Jose, if you let the 21-3 lead the way, it's slow, man. It's slow. Now you have a 50-50. Jose, on a daily chart, it might be in a downtrend, right? I don't think. That sounds like an opinion. What do my indicators say? My indicators say that I have a 50-50 on two areas, that I have my second loss of momentum, that I have smalls inside of the large, that I have a reversal bar with a short signal followed by a breakout bar, that I am giving away advantages hand over fist right here. I don't have to think the fib will hold. I'm reading my indicators. Follow, what's 50-50 about this trade? Just curious. That's your 21, so that's your termination condition. That's okay, that's the one that didn't make it. There's your pullback. Sorry, I got confused on this one for a second. Rockstar entry, money, money. Beautiful. So Jose, let me help you with this and let me know what you think. If I take the 21 out of the scenario, do you like it then, Jose? And you don't have to. I love this, especially with the 21 out of the mix. If I add the 21, what do I have? I have odds favorable triggers, momentum cranking to the upside. Where's that momentum likely to push it? Fibonacci resistance. You guys pay good money for these fibs. You'll learn to trust them. I like it. The 21.3 even said, there's my spot for potential down. What a great place to take profits. And then if you took profits there, let's see what happened. Divergence, divergence, weak triggers. You see how that works? I love the 21 for areas. I try to not let it lead the way too much, but if I'm going to let it lead the way, what's the direction? The direction is up. The small triggers are up and strong. I can identify the area and I can use that for profit targets. And I love that. And it may go down from here, right? So Jose, if this says termination condition up, watch this. And this says 50-50. And this says multiple divergences with weak triggers. And this says cool your jets. Well, then that's where my brain says, all right, this 53 spot is trouble on every freaking chart I own. I'm not taking this 50-50. And if it goes up, that's cool, whatever. I don't care. But I've given away enough advantages that I'm willing to sit on my hands. But because over here that area hadn't been reached yet, I'm at least going to get up to the area. Does that make sense, Jose? And really everybody, not just Jose. Absolutely, 21.3, your possible stop is a target because you're not trading the 21.3, you're trading the 13.2. And the 13.2 said there is very little chance that we're not going to make it to that possible stop on the 21. And guys, this is why I always encourage people, don't add charts until you're able to use them effectively. And you have to have a set of rules for how you're going to use that chart, right? You have to have a set of rules for how you're going to incorporate that 21. If you have it up there and the way you read it changes every time you take a trade, it's going to be hard to take the same trade. So the 21.3 Jose said profit target. The 50-50 said be aware. The 5-1 said don't take it. See how it trickles down? Big to small, big to small. What are my advantages? What are my disadvantages? Thank you, Paul. I still get nuggets of stuff every day. Jose's got me thinking about momentum, right? Jose's got me thinking about different looks. Gary, every time he posts something, makes me go through and thinking, okay, there's a termination, there's a momentum, there's a divergence. And guys, you make me a better trader. You really do. And hopefully I do the same for you. Hopefully you guys are developing an understanding more and more each and every day through repetition. You're never going to stop learning. Never stop learning. So Jose, thank you for that, because I think it gave us a great lesson on if you're going to use a larger chart, use it for areas, use it for direction, use it for targets if you want, but don't let a 21 run your life. I could make a 34 chart and it probably says all down. So Jose, based on your 21, right? That's okay, Folger. Have a great afternoon. Guys, don't ever apologize for having to leave. It's okay. I cry a little bit on the inside, but I know I'll see you again. I do love what I do, and I enjoy the heck out of you guys being here. So let's talk about that large chart again. Jose has a termination condition from a bad bottom that lines up with the midband, right? I have a 50-50 that failed, 3 divergences in the same location, but my trigger lines all still say up, right? So I'm not going short based on a 21. But I'm not going long into the area. I'm going to say this area has to break, right? Now I've got a pivot stop out at an area that my largest chart says is likely to hold. It's still a 50-50. My small triggers are way the hell down here. I don't have momentum yet on my 8 range, so I'm not going long yet, but it's really too soon for a short with this momentum. So guys, if I can't go long and I can't go short, what do you suppose I should be doing right now? What's my best chance of success? Just sit tight, right? Because it's all going to change. It's like a bus. Whoops. I drew too much on my chart. Guys, that'll happen. If you're using 8 and you don't have a great graphics card and you start drawing like I did, like a Yahoo, it may crash that thing. And I apologize for that. That was self-inflicted, I'm afraid. All right, you guys ready for the end of class lecture? Whoops, that's the wrong one. Wrong PDF. I'm going to share this with you guys, especially for my new users. To minimize the learning curve, post your pictures of trades in class. Every trade, win, lose, or draw. And if you win and the rules are wrong, there may be a short-term victory but a long-term failure. Guys, the market is going to let you win on sim. And then Murphy's going to come in and take steel toe to butt when you go live. We've all had it happen, right? If you're making mistakes, you're posting pictures in the class is going to help us identify not only the mistakes, but also the patterns. Some of you love to trade in determination conditions, myself included. That was my biggest thing. And when I corrected that one, oh, man, that's weird. I was thinking about Zeba this morning. She ditched us, didn't she? I have to send her a message, make sure she's doing all right. Post them in the room. Oh, it is Ramadan. That's true. And you guys notice that the numbers are lighter today. So this is a very important time of year for an awful lot of people. And a lot of them are staying outside of the classroom right now. I have a feeling when it's over, we'll probably see those numbers jump again. Post everything in the room. If you take a trade, post it in the room. If you think you see a trade but didn't want to take it, post it in the room. Let's talk about it. If you take a trade and you say, holy smokes, I broke every rule under the sky, post the chart in the trade and post the rules that you broke. Confirm them. I'm here to help, guys. 15 hours every week. I'm available. Most days, John Novak is in this room as well, and he's talking with you guys and sharing things that he's learned, having written the software 27 years later. You need someone to tell you what you did right or wrong. And this is what Nexgen offers, guys. If you're brand new and you're on demo, I hope that you're beginning to recognize that we are here for you 100%, that the feedback is available every day, and that this is, in fact, a marathon, not a journey. Make sure that you're following the path, right? Learn the rules when it's okay to trade. That's my job, is to teach you these rules. I can only do my job if you ask me questions and tell me where you need help. Simulate every day. There's no risk of losing money on simulator, guys. Don't practice the wrong trades. Get the correct rules. Simplify. Stay focused. Simplify. Use market replay, retrade the day, fix your mistakes, take a lot of pictures. Repeat it every day until you always take the correct trades. When you take a rules-based trade, put it in your spreadsheet. Annotate your charts. Get them into the spreadsheet. Define your management plan. A mechanical approach that eliminates emotion or opinion tends to be the most straightforward one for new users. Alter your plan when you're done with the education. There's that same one that we talked about. Give yourself 30 to 90 days for that checklist-based entry, for that automated exit, and then your targets will be adjusted as you grow with the software, as that experience comes in. And then guys, Apex. And you know who I'm talking to right now. If you already have an Apex account, they're going to charge you monthly anyway. Just without a doubt. They're going to charge you monthly anyway. If you're at that point where you're like, man, I'm pretty sure I'm there, but I'm not sure that I'm there, do the Apex account. It'll let you know. It's a different animal with that skin in the game. It really is. And you're going to learn a lot about yourself and what you do under pressure. Don't abandon the educational process here. When you're on Apex, I really want to see your trades because I want to help you win. I want to help you do that. But this lets you not lose your own money. Don't do what I did, guys. Don't decide that you're ready, that you're some sort of day trading badass with 30 days under your belt and give up $5 grand to a market in a matter of days. That's what I did. It didn't work out. So here we go. There's that fight, right? We knew that 54 was going to be a fight spot. We knew that we had a lot of momentum, so we weren't going short just because of a termination condition. Did you see how your small chart is starting to show change? Triggers are starting to roll, but there's still tons of momentum. Synthetics are still up, but the large triggers are down. The large triggers are rolling. The small triggers are down. But 41's creating problems, isn't it? The same way 54 is creating a problem, 41 is creating a problem. And look at the market bounce in between those two areas. Now I can play if-then. If the market continues up from here, breaks 54, well, we're probably going to the moon. But now my small triggers have rolled. I don't even have odds favorable anymore. I'm at one of those high volume areas. If we start getting below 41, that momentum happens, well then maybe that 21 chart is right. Maybe we're going to continue down. Maybe the sellers have a little more in them, right? You guys have Nexgen software. You can identify where these guys are going to fight, and you have a set of rules designed to keep you out of that fight. All you have to do is follow them. Define them and follow them. Good top, good top. Everything says down. No divergence, hadn't reached the spot yet. Interesting entries, Paul. Let's see. Whoops, sorry. How do I make that bigger? There we go. 21.3 termination condition. 13.2 termination condition. Since there were anything can happen triggers, you said it may push up higher. You took the first entry and it got you. You take the second entry and it got you. And then you take the third entry and it all worked out. So where is that? 41.72, 41.72. Paul, wouldn't it be amazing to just wait for that first signal? Because you don't have areas inside of favorable large triggers, right? Rule 3 is not met. Rule 3 is not met. Confirmation gives you the advantage. I love that one. Great picture. The rules are there for a reason. If your rules aren't met, it's okay to wait for confirmation. And you can say to yourself, man, I know that the odds are favorable for this market to go down. But Paul, if it's 50-50 on the 21, and you're losing momentum on the 13.2, and you don't have any areas Yeah, on the 5-1 inside of favorable large triggers. Let me go through the way my mind would work on this and tell me if it's anything like what your mind did. I think that on the 13.2, let me scroll over. It's possibly accelerating, but isn't the market exhausted? You've gone from 41.86 all the way down to 41.66. That's a 20-point run that stopped 2 ticks from 1-to-1s in support, right? And when you get to this one, doesn't this trigger look kind of confirm that this might be an exhaustion? Thala, take care. Does that make sense, Paul? The bars are on the inside. The triggers are here. See how the bars are outside? The bars are inside. You're just losing momentum. You're just losing momentum. So it comes into a matter of... And there's a point, guys, where your brain's going to do all of this in a fraction of a second through repetition. So, Paul, as you lose momentum a little bit, you know that based on that 21.3, the market's probably going down. And you know that you trade from areas. So you're like, it's probably going to be somewhere between the mid-band and resistance. Oh, I didn't take the full picture. All right, so we've gone that far. So let's scroll over and get the market flow picture too. I'm a big fan of doing this after the fact. Get that a little bigger for you. All right, so Paul, I'm just going to give you my thought process. You know that it's probably going from here to here, give or take, right? So when the market tapped the mid-band and gave you down ticks, this was your first oh crap moment. It's going without me. And I know it because you got in at the bottom of the bar without any market flow confirmation. And then from here, you thought, holy smokes, that's a ton of risk. And you get stopped out. And you're like, son of a gun. And you're like, oh no, down ticks again. It's going without me. And you're like, that's a ton of risk. And you get stopped out. Son of a gun. Paul, what's the one thing that you're fighting hardcore without an area inside of favorable large triggers? Look at how vertical those small triggers are. Isn't that momentum in the moment? The bars are way outside. Everything says up. There's nothing in the areas. You're like, oh my gosh. And then rational Paul comes into play. And he says, you know what? I can wait for confirmation. This area is likely to hold. That loss of momentum is probably going to push it to that area. So you get confirmation. And not only do you get confirmation, but look at how the bars... Oh, is that 13 range? Yeah, it is. Okay, so let's do this. Do you see your entry bar? Where did it close? It closed inside of the small triggers, right? The bars came in. Your next bar closed below the small triggers on the other side of that stuff that you were fighting. So if you're using the 13.2 and the 13.2 confirms, there's no reason why you can't at least get on the correct side of the smalls on that 5-1 chart. I think you read it perfectly, but you had two dag nabbit it's going without me moments. So no matter what you make on this trade, it's got to make up, especially if these were 4 lots, it's got to make up for 2 full losers on 4 lots to be effective, which means that because you're thinking that, you're at the risk of making poor decisions on your management because you didn't wait for some sort of confirmation. So while the 13 range is good, I recognize patterns in people. John and I were talking about that the other day. The way John Novak recognizes patterns in the market and turns it into a formula for you guys to be successful, my brain sees patterns in people. From what you say, from the way you behave, from what you're doing, I begin to recognize these things. And guys, that's one of the great things about this class is I'm not shy. I'm going to tell you the patterns that I see in you because we all have them. We all have things that we want to do. We all have trades that we want to take. We all have rules that we want to break. And the more you post in class, the more I recognize your patterns. Paul, I've got you figured out 100%. I could probably go through Market Replay and take every one of your trades and send it to you, and we could compare, and I guarantee I'd be within 80 to 90%. Same thing with Gary. Safia, I've got you figured out. All of you guys that have spent the time to participate in class are showing exponential growth, and I'm so comfortable with what you're doing that it even becomes easier for me to help you. So, guys, that's it for me today. I sure do appreciate y'all being here. I appreciate the fact that you'll post. I love that you'll participate. And I really do appreciate the opportunity to help you guys. So do me a favor. Study. If you don't have a plan written, write a plan out. If you don't have a checklist, create a checklist for your trade. If you trade this afternoon and you take trades, take pictures, bring them in tomorrow. Ron, take care. Say hello to the beach for me. I'm 38 and cloudy here, so I'm living vicariously through you right now. And the guys, I'll be back tomorrow morning. We're going to do it again. Same thing. The room is yours. Stick around. Trade tips. Talk. Talk about the challenges that you have. 104. Safi, I'm not going to lie. That sounds amazing. When I landed in Houston, it was 88 and humid, and it was the happiest moment I've had in 2 months. I don't know. When I was in Austin, that was the perfect golf weather for me because nobody was on the golf course. Ron, man, you're hard to like. You know that, right? John Novak sends me pictures of Sarasota, Florida weather every day. Hey, I noticed it was 22 degrees and snowing there. Look at this, 81 and sunny. Ha, ha, ha. I think he's trying to get me to move out there. Maybe one day. I'm too young for Sarasota. Safia, that was a shot. Safia, you're too young for Sarasota. Guys, I appreciate everything. Thanks for being here. I'm going to go see if I can find a couple high probability trend trades. Yeah, I think you and I are in the exact same boat, so maybe I'm not too old. I'm going to go see if I can get some of my rules met before I head off. Jose, thank you. I think great forward progress today. And guys, do me a favor. If you've been with the software more than 60 days, go back and look at your pictures from 60 days ago. I don't think as humans we celebrate how far we've come. We only look at the challenges in front of us. So go back and look at what you've accomplished in the last 30 or 60 days. And if it's eye-opening, share it with me in class tomorrow. I love those stories. Guys, I'll see you in the morning. Be good. Have fun. Take care.